Namaste one and all. And today I am planning to explain about prudential norms applicable to restructuring. It is just nothing but part and parcel of the NPA circular issued by Reserve Bank of India and which is effective from 1st April 2023. During this year, about restructuring of advances. This I want to explain you whatever possible for your getting knowledge. Here, prudential norms applicable to restructuring. Before going to the video, I request you all to please watch this video up to the end. And if you liked if you like this video, please like it and share it, watch it and subscribe it. And I thank you very much for watching our videos regularly. And now we are going to discuss about restructuring. What is the definition of restructuring? Restructuring is an act in which a lender, for economic or legal reasons relating to the borrower's financial difficulty, grants concessions to the borrower. So, whenever the borrower's financial difficulty is there, then the lender or the banker will give or grant some concessions to the borrower. That is called restructuring. It is an act of which a lender, for economic or legal reasons relating to the borrower's financial difficulty, grants concessions to the borrower. Restructuring may involve modification of terms of the advances or securities, which would generally include, among others, alteration of payment period. Usually payment period may be extended, payable amount may be deferred, the amount of installments, that means installment amount also may be changed, rate of interest, that also may be changed, rollover of credit facilities, sanction of additional credit facility, or release of additional funds for an account in default to aid curing of default or enhancement of existing credit limits, compromise settlements where time for payment of settlement amount exceeds 3 months. So this is the definition of restructuring. You all are able to understand that in case of difficulty, financial difficulty of the borrower, lenders will come into the rescue of borrower's financial situations to be crossover. For this purpose, the board approved policies of lenders on resolution of stressed assets required to be in place in terms of these guidelines shall also have detailed policies on various signs of financial difficulty, providing quantitative as well as qualitative parameters for determining financial difficulty as expected from a prudent bank. In order to enable lenders to frame respective policies for determination of financial difficulty, a non-exhaustive indicative list of signs of financial difficulty are provided as under. This is as per R.B.I guidelines, latest guidelines, and also as per NPA circular, which is effective from April 1, 2023. What are those indicative list of signs given by Reserve Bank of India? Or a default as per the definition provided in the framework shall be treated as an indicator for financial difficulty irrespective of reasons for the default. A borrower not in default, but it is probable that the borrower will default on any of its exposures in the foreseeable future without the concession. For instance, when there has been a pattern of delinquency in payments on its exposures. Delinquency, you all know that, delay in paying the installments and all. A borrower's outstanding securities have been delisted or in the process of being delisted or are under threat of being delisted from an exchange due to non-compliance with the listing requirements or for financial reasons. This is also one of the listed points. On the basis of actual performance, estimates and projections that encompass the borrower's current level of operations, the borrower's cash flows are assessed to be insufficient to service all of its loans or debt securities, both interest and principal, in accordance with the contractual terms of the existing agreement for the foreseeable future. A borrower's credit facilities are in non-performing status or would be categorized as non-performing without the concessions. Based on the Basel Committee guidelines on prudential treatment of problem assets, definitions of non-performing exposures and forbearance. A borrower's existing exposures are categorized as exposures that have already evidenced difficulty in the borrower's ability to repay in accordance with the bank's internal credit rating system. You all know what are the credit rating systems and particular bank's internal credit rating systems. According to that that bank's internal credit rating systems, these should be categorized as exposures. The above list just provides examples of possible indicators of financial difficulty, but is not intended to constitute an exhaustive enumeration of financial difficulty indicators with respect to restructuring. Lenders shall need to complement the above with key financial ratios and operational parameters, which may include quantitative and qualitative aspects. In particular, financial difficulty can be identified even in the absence of arrears on an exposure. Exposure means all you know, whatever they are having, loans and advances and all. The robustness of the board approved policy and the outcomes would be examined as part of the supervisory oversight of the Reserve Bank. That means whatever the banks are taking at the board level for restructuring, according to the definition given by the Reserve Bank of India, these all are Reserve Bank of India will examine afterwards whether these all are properly defined or not and properly restructuring has been done or not. So overall, as per R.B.I circular on NPA guidelines, these prudential norms applicable to restructuring, most important is whenever the borrower is in a difficult situation, then restructuring will happen. In case of restructuring, what will happen? The amount may be changed, or the installments, amount of installments may be changed, or number of installments may be extended, or the rate of interest may be reduced. Such type of various restructuring can be done. Or in case of need, the borrower needs for some more assistance also in the form of credit facilities the banks will give under this restructuring facility. So all you are able to understand about the definition of restructuring and the situations when we means bankers can give the restructuring facility to the customers whenever it is the borrower is in financial difficulty. Thank you one and all, and I request you to please share this video among your close friends and subscribe our YouTube channel Suvarna Chundi, and I thank you very much and expecting again with some more videos in front of you. Thank you.